Joining us now is the Shadow Treasurer Jim Chalmers to talk about the issues of the day. We'll start with the deeming rates. Shadow Treasurer, Labor's been critical of the government's decision on this, or the reduction at least, saying it doesn't go far enough. But isn't the Treasurer right when he says there isn't a direct correlation between the deeming rate and what a part pensioner might earn in terms of interest? You have to factor in dividends, superannuation income as well.
I think he's just making more excuses, Kieran, for the fact that for some years now and 5 interest rate cuts, the government did nothing for pensioners. And now they're expecting a round of applause for delivering for pensioners something so little after so long. And with an outcome like that and with an attitude like that from the Treasurer, no wonder so many pensioners are up in arms about the moves that were taken by the government on the weekend. Too little, too late. After years of making the kinds of excuses that the Treasurer seems to be making again today.
Isn't it true, though, that for many on the upper deeming rate, as it's called, earn more than the deeming rate would suggest through other investments?
Well, what it means is that for pensioners who are looking for very safe investments, who don't want to necessarily get into stocks or anything like that, they want to get into the safest types of investments, because typically pensioners can be quite conservative, understandably, with how they invest their money. A lot of those people have been dudded for some time now. Obviously, there are higher returns available elsewhere in the economy and elsewhere in the financial markets, but for a lot of people who want to have that conservative strategy, they've been sold short.
Is it a lot of people, though? Because my understanding is that a majority of those on the upper deeming rate earn more than the deeming rate would suggest. And in fact, talking to a few of the groups that represent the pensioner cohort, that they're satisfied with the government's move in terms of the upper end reduction.
I don't know if that's the case, Kieran. I mean, obviously some pensioners get a higher return than the deeming rate, but I would need to be convinced by government figures that what you've said is accurate. I think the pensioner groups are trying to get what they can. They know that they've been dudded now for 4 or 5 years. They know that there were 5 interest rate cuts before the government was dragged to this outcome kicking and screaming. And so they're going to try and get what they can. But I think the overwhelming view, not just amongst the peak groups, the pensioner peak groups, but certainly amongst pensioners out there in the community, is that this is too little too late. They've been shortchanged for so long. The government has been balancing the budget on the back of pensioners, as Richard Marles said rightly yesterday. And I think there's a bit of anger about it still out there in the community. I don't think it's been resolved. And I saw in the clip that you played a moment ago that the relevant minister was saying that they would keep things under review. Well, they've kept things under review now for years, and pensioners have been dudded that whole time.
In relation to how this judgment is made, do you think it's now time to look at least getting an independent body to govern these matters? It seems your colleague Linda Burney's open to such a move. Are you?
Oh, what Linda said and what I've said before as well is that the pensioner groups have made these sorts of suggestions in good faith. They wouldn't be making these sorts of suggestions if pensioners hadn't been dudded for some years now. This is something that they've been forced to suggest because the system, as the government has overseen it, hasn't delivered for pensioners. We're always willing to discuss these kinds of ideas, but it's not our policy to change the way that this is determined. And it may be that the best way, if the pensioner groups want this advanced, is that they should put pressure on the government to include it in their retirement incomes review, which is underway in this term of the parliament. We in the Labor Party are at best 3 years from government. It's not for us to change the way this decision is taken. We always listen respectfully to ideas proposed in good faith, but it's not currently our policy.
The Council of the Ageing has made a renewed push for a change to New Start. Is it time for Labor? Is there room for Labor now as part of your policy review to toughen up your position on that? Because it seems every group is backing it, from the Business Council through to ACOS and social welfare, the Council of Ageing. Chris Richardson, the economist we spoke to this morning, says it's a no-brainer in economic terms. It's been a quarter of a century since we've had a real increase in New Start.
I think that the concerns that have been raised about the adequacy of Newstart are well founded. We've said for some time now, in the lead up to the last election in particular, that we don't think that Newstart is adequate. We took to that election a proposal to review Newstart because the dollars involved are quite large and you want to make sure that you get all of the interactions with other payments and other programs right. But we've made that point for some time that we don't think Newstart is adequate. Again, Labor, unfortunately, is at best 3 years away from government. So the ball is in the Morrison government's court. These concerns are well founded and the government needs to respond to them and address them.
But it's 3 years is also time you could get the Parliamentary Budget Office, yourself as Shadow Treasurer. You could get that work done, couldn't you, potentially before the next election and take a firm position that an Albanese government, if elected, would increase Newstart. There's plenty of time to do that now.
Obviously, when we talk about reviewing all of our policies and we talk about coming up with an agenda for the 2022 election that we'll put to the people, clearly there are a range of options and alternatives that we need to factor in, including that, but other policies too. We've said that about tax policies. We've said that about education and health investments, infrastructure, right across the board, obviously. We didn't ask for another 3 years of opposition, but we'll use the time wisely. We will come up with an agenda to take to that election. We're not in a rush. For the time being, it's up to the government to respond to those concerns about Newstart, but we'll play a constructive role in that conversation as it unfolds.
What's your take on the report by Deloitte, Access Economics? It's been reported in the Financial Review today that the RBA comments have been misinterpreted, that the economy is doing better than many would suggest, and that the rate cuts aren't because the economy is going to hell in a handbasket, but basically because the RBA wants to essentially put its foot on the accelerator a little more. That's the argument from Deloitte.
Oh, look, I think obviously the Deloitte report's an important input into the national economic conversation, and I don't have anything against Chris or the organisation, of course. But it's just one opinion in a range of opinions. And what is beyond dispute is that the economy is growing at its slowest pace for 10 years. Wages are remarkably stagnant. We've got consumption which is weak, high household debt. We're in a per capita recession. There are a lot of things in the economy which are very troubling. The point that Chris was making and Deloitte was making, which I think is right, is that when you've got tax cuts in the system, interest rate cuts in the system, APRA's relaxing its lending rules, and you've got the Australian dollar where it is, all of those things will be helpful. But even with all of those things factored in, that Deloitte report which came out today is still forecasting below trend growth for the next year or two. And so I do think we've got big economic challenges. And I'm worried that the interpretation that you just mentioned in the Financial Review today, but elsewhere today as well, really feeds what's a troubling complacency in the government. They won the election, the economy has deteriorated even since the election, and the government's still got their feet up. And what we've said all along is that there are very soft spots in the economy. Growth is feeble, wages are stagnant, and the government owes the Australian people more than to just pretend that there's nothing wrong. One of the most interesting parts of the Deloitte report today was where they're actually more pessimistic about wage stagnation in this country at the moment. And if you read the Reserve Bank publications, the thing that they say is more responsible than anything else in the domestic economy for slowing growth is the fact that we've had this really weak consumption, which is a factor of such weak incomes growth for so long. That is the main problem that we have in the economy. The government has no plan to turn that around. And for as long as we have that stagnant wages growth, we're going to have weak economic growth.
When you look at one of the things that Labor's been arguing and others for infrastructure boost at the state level, and in your beautiful hometown of Brisbane, I know the Cross River Rail, for example, cranes across your city, there is at the state level a lot being done. Would you agree with that?
Oh, but they need a hand, Kieran. I mean, yes, it's good to see the states kicking in for infrastructure, and Cross River Rail really is a perfect example of a job-creating, productivity-enhancing project which isn't just good for the inner city, but is good for communities further out, including my community. It'd be a game changer, really, getting people to and from work and making the economy of Brisbane and South East Queensland work so much more efficiently on behalf of everyone. But the Commonwealth Government's got, they like to talk about $100 billion in infrastructure investment, but what they don't tell people is that only something like 30% of the new projects in the last budget, or the funding for the projects, comes in the next 4 years. It's very back-ended. And what the Reserve Bank has rightly called for, and what we've called for, is to work out which of that infrastructure investment could be brought forward in the interests of jobs, in the interests of boosting an economy which is floundering right now under the Liberals.
And Jim Chalmers, finally, are you comfortable with what you saw last week with that picture opportunity, Governor Lowe alongside the Treasurer? Is that appropriate?
Oh, look, first of all, I mean, my beef is with the government, not with the Reserve Bank. I'd like to work closely with the Reserve Bank in 3 years if things go that way. But I did think it was a bizarre picture opportunity. It's entirely appropriate for the government to meet with the Reserve Bank Governor and indeed to be seen in public, obviously, with the Reserve Bank Governor. But that was quite a bizarre picture opportunity. And what I think it says about Josh Frydenberg and about the Morrison government is that they have a media strategy. They can always get themselves in front of the camera. Their media strategy is to talk about Labor and dust off the old rhetoric about unions and red tape to try and distract from the slowing economy. But they don't actually have an economic policy to get the place growing in a sustainable way again. And I think if Josh Frydenberg and others spent more time working on a policy to get the economy growing and less time in front of the camera, less time with these kind of bizarre picture opportunities, I think the whole country would be better off.
Shadow Treasurer Jim Chalmers, thanks so much. Appreciate it.
Thank you, Kieran.